In about 12 hours, we are going to be getting Tesla's Q3 delivery numbers, and the expectations are all over the place. I want to give you my estimates, how Tesla could actually come out and beat everyone's estimates. There is a path that this could actually happen, and I'm pretty excited to share that with you guys. I want to give you an overall feel on what to expect, how this could affect Tesla stock. Could this actually lead to a breakout into the $300 range? Well, it's possible. We're going to go ahead and give you all of this. Plus, I want to talk about the seasonality of where we are at here in this market. September is the worst month for stocks. What about October? What can we expect? We have all of that and much more for you here in this video. I hope you guys enjoy it. Let me know what your estimate is down below in the comment section. If you guys have been a follower of this channel for a while, then you know last quarter, we were within 1,000 deliveries of the actual number in our estimate. So last time we were literally spot on. We were the closest one. But that does not mean this time around we will be the closest one. Again, I have my own estimates. Let's go ahead and get straight into it. Hit the like button and subscribe to the channel if you are excited for Tesla's Q3 delivery number. This should be coming out in about 12 hours, almost exactly, around 8:30 in the morning Eastern Standard Time tomorrow. So first things first, the average analyst consensus is 455,000 deliveries. Gary Black expects 445,000 deliveries, and he does think that in between 445,000, 455,000, Wall Street can look past that. Anything less than 445,000, markets might say, hey, why are deliveries so low? But slightly under average analyst consensus, not terrible. Dan Ives recently said, quote, while from a demand perspective, we believe Tesla was on track to hit 460 to 465,000 in the quarter, longer than expected downtimes of the factories in Shanghai and Austin caused likely 20,000 units to shift into Q4. 440,000 is the line in the sand, our view. He writes things a little bit weird, but basically he's saying 440,000 and up is what they expect. Gary Black also wrote this on X, which Dan Ives reposted, so I think it's safe to say he agrees with what Gary Black says here. It says, more important than Tesla's Q3 delivery is the estimates for 2024 capacity, since Tesla deliveries are likely to again be capacity constrained in 2024. My 2024 capacity estimate is now 2.7 million versus 2.025 million capacity shown in Q2 earnings. Tesla's capacity will be updated in the Q3 earnings deck. Fremont, SNX at 100,000. 3 and Y at 600,000. This is 100,000 higher. Subtotal of 700,000. Shanghai, 250,000. Production, that's a boost. Production of 80,000 a month in Q2 and Q3. And Berlin at 450,000, up from 75,000. Texas at 550,000 total, bringing your total to 2.7 million. Now, this is important because the estimate right now from Wall Street is about 2.3 million deliveries next year. Now, if Tesla were to grow at 50% from 1.8 million, well, that would put next year deliveries at about 2.7 million. So that would be fully selling the capacity of all of their factories. Some individuals on Wall Street are starting to expect 2.1 million deliveries. And we recently went over that news. 2.1 million deliveries would be like 15% growth next year. Very, very low. So I do agree that I think capacity will be important because you can only deliver as many vehicles as you can produce, right? If you want to grow at 50% compound for multi-years, as Elon has previously set guidance for, you need more capacity. Capacity needs to be growing each and every single year, or you're not going to deliver 50% more vehicles every single year. So there's a couple things to know about the delivery numbers that we get tomorrow. We get the actual delivery numbers, but we also get production. So The estimates here on Wall Street on the higher end range, the highest estimate out there is around 510,000 deliveries. The lowest estimate out there is around 430,000 deliveries. My estimate is around 434,000 to 440,000. Now, something to consider here is we get very good data out of China, out of Australia, out of Europe. Some of the major markets for Tesla. But we get virtually no data out of the US. So how I like to run my calculation and what I have found to be the most accurate, this is how we were within 1,000 deliveries last quarter. I expected 465,000 deliveries. The number came in a little bit over 466,000 deliveries. We were literally spot on because you can take into consideration China deliveries, China insurance registrations, Europe insurance registrations, Australia insurance registrations, and then trying to figure out the US is the hard part. What I like to do, and what I have found the most accurate, is taking China's deliveries and adding 30% to that. And that's usually what you get for the total for the US. So when I do that, I come to 434,000 units. Now, here's the thing. Tesla has about 99,000 vehicles in their inventory. At least they did last earnings. Theoretically, if they were to sell their inventory in Europe and in China, we would get those numbers that would be added to the vehicle insurance registration numbers. But if Tesla sold a lot of inventory in the US, that would not necessarily come to us in any data. So what do the inventory numbers look like here for the US? And take a look at the inventory numbers. So especially for the Model Y, on September 3rd, there was about 5,300 Model Ys in inventory. Well, take a look at that number today. You're at 191. You're at about what is this? Model S at 303, Model 3 at 392, and the Model X at 443. So all of these have went down by thousands just in the month of September alone. Especially the Model Y is obviously notable here. This is only looking at the US. And if you take a look at the percentages, the Model S inventory is down 49.4%. The Model X inventory is down 57.7%. The Model 3 inventory is down 44.5%, and the Model Y inventory is down 75.4%. These are numbers from last quarter. So it's obvious. Tesla sold more inventory. The question then is, do we really think the Austin shutdown affected the numbers a lot? They were only shut down for like 2 days, if I recall. I would argue probably not. It probably didn't have that big of an impact. So that's where things get interesting. So based on the raw calculations that I have done in other videos, that would put deliveries about 434,000. What if Tesla delivered 40,000 deliveries from their inventory in the US that did not get picked up in this data that we cannot not account for? Then you could be looking at deliveries at 474,000. You could be more conservative here. You could say 30,000. You could say 10,000 vehicles were delivered from inventory. That's where you get a range from 445,000 to 474,000. This is the wild card that we don't know. And that's what makes this quarter especially interesting, because you can have estimates all over the place. And if we do go ahead and take a look at this chart, this is Tesla estimates for deliveries versus real deliveries and the stock reaction, okay? So what you will see here is basically every single time Tesla misses their estimates, the stock sells off. Now, if Tesla beats the estimates, you can see quite the gain in Tesla's stock. Okay, Like in 2021, Tesla beat estimates by 16%. The stock was up over 10% that day. Back here in Q4 2022, Tesla missed estimates by 3%. The stock was down about 12%. And even more recently, Tesla beat the estimates by 4.32%, and the stock was up about 7% in a single day. Well, now the estimates are about right here. So a lot of investors that are invested in Tesla stock, or a lot of hedge funds institutions, they're invested in Tesla, but they don't keep up on what's actually going on with Tesla, what the news is, what's going on, the factory shutdowns, what Elon said on the last earnings call. Elon said expect lower deliveries this quarter, and the consensus view on Tesla's deliveries was about 473,000 deliveries a couple of weeks ago. People just said, nope, we're expecting another all-time high delivery quarter. Estimates have come down from that, but that's just showing you the lack of kind of information, education a lot of people have in regards to Tesla. So I'll tell you right now, off of the initial just reaction, if you miss estimates, Tesla stock's probably going to fall. If you miss 455,000 deliveries, Tesla probably going to fall. If you exceed that, Tesla stock's probably going to rally. Pretty straightforward. But something that could be much different this time around, something we have not seen in about a year and a half. What if Tesla sells more vehicles than they actually produced? That's interesting. We have not seen that in a very long time. Meaning that what if Tesla only produced, call it 380,000 units, but they sold their entire inventory, or close to their entire inventory? Do a little bit of calculation on that. What if Tesla produced 380,000 vehicles, but if their inventory was roughly 100,000, what if they sold 70,000? Then Tesla would slightly miss the estimate, come in at about 450,000 vehicles, but this could mean a huge jump to EPS for this quarter. Because why? Analysts have a current estimate for Tesla's EPS of 78 cents for this quarter. This is down from 3 months ago of 84 cents. 1 month ago, the estimate was 80 cents. So EPS estimates have been falling. Now, Tesla has to realize cost, profit, standard accounting every quarter. So this 100,000 vehicle inventory number, you've already seen the cost of those vehicles reflected in prior earnings. If Tesla did sell down most of their inventory, in which the inventory numbers look like they have, Tesla's bottom line could look a lot better than analyst consensus estimates of 78 cents. So that, I think, could offset a slight miss to deliveries. Now, again, my estimate, 434,000 to 440,000. Again, though, there is that chance that deliveries come in much better than that if the inventory numbers did get drawn down a lot. And this could have a very bullish effect on Tesla stock. So that's kind of my estimate range. That would be including no inventory sell down. Now, if Tesla did sell inventory, then you could probably put the estimate, let's just go with the same calculation that I had before, 434,000. Let's say Tesla sold 30,000 vehicles straight from their inventory. Then you could see a delivery number of 464,000. I think that is within reason, within a reasonable estimate. Anything higher than that, and I think Wall Street is going to be blown away, and Tesla stock could probably see a 10% gainer tomorrow. Anything around my lower end estimate, 434,000 vehicles. Tesla stock probably initially sells off, but again, it's gonna come down to how many vehicles were sold out of inventory. Did inventory numbers go down? And how many vehicles did Tesla produce? If Tesla produced a low amount of vehicles, but they sold all 100,000 in their inventory, or a majority of them, investors are probably gonna like that. But the algorithms might sell the stock off initially, so that's an important number to be watching for if we do get the number and Tesla stock does sell down in the beginning of trading. It's possible algorithms sell the stock down, and then you see a ferocious rally throughout the day tomorrow. Again, if Tesla sold a lot of their inventory. And if we do go ahead and take a look at the charts here for Tesla, Tesla is looking beautiful. Such a strong chart right now, even considering some of the weakness that we had on Friday, or even over the last couple of weeks. You have really set a trend from the lows that you've seen back in January of 2023. Connecting these points, Tesla is well above that right now. Your level for any big downside on this, this ascending line of support, is around 235 right now, 236. Tesla's well above that, and it closed at $249.99. Your 100-day moving average is at, let's go ahead and see, $242.33. You're well above that. You kind of gapped above that even on Friday, being up 1.56%. Your 8-day moving average, you are above that at $248.92. And your 50-day moving average at $251.23. We tried to hold above that into the close of Friday, but we did not. You actually hit a high on Friday of $254.77. The 50-day moving average again, $251.23. So that's not great, but you're really wedged here between your 8-day moving average and your 50-day moving average. If you can break above and see a bullish reaction coming tomorrow, you could also retest or be pretty dang close to retesting your downtrending line of resistance. This is a line that has been following us since the highs that you've seen back here in 2021. So if you can break above this, then you could see quite the move here. And this is going to be around $265 per share. If you break above $265, that could start a huge run well into the 300s. If you take a look at the MACD has recently went positive. Now it's back negative again, but I would say it's pretty neutral overall. It's slightly on the negative side. The MACD line is negative. Signal line is still slightly positive. The RSI at 48.15 is literally neutral. 50 is considered exactly neutral. You're slightly under that, but this is plenty normal for any stock. Now, I think something else to consider is October 1st is technically the start of fiscal year 2024. Now, the historical kind of performance of October is very interesting, and we'll get into that here in just a second. But if we do go through a slower growth economy, maybe even a stagflationary economy, then investors, they are going to want high quality and growth. So what's interesting about 2023 is some of the stocks that did the best are not growing that much, like an Apple, like a Microsoft, like a Google. These stocks, yeah, sure, they are self-funded. They don't need to raise capital. Tesla is self-funded. They don't need to raise capital. And when they do, they go to the bond market. So very efficient way of raising capital. But unlike Tesla, those stocks are not growing. Those, well, in respect to their valuations. Microsoft or an Apple growing at 5 to 7% as far as their bottom line earnings is not really justifying a 30 times PE multiple on these names. Whereas Tesla is growing their bottom line at over 35% with a 68 times multiple. If you consider the growth rate of Tesla relative to an Apple or a Microsoft, Tesla is 3 to 5 times cheaper than these names. So during a stagflationary environment, or a stagnated kind of environment in general where the economy is not growing that much, maybe you avoid a recession, but you're not growing much. Well, investors want to buy higher growth names, okay? Names that maybe did not perform as well as the broader indexes last year. A Tesla, small and mid-cap stocks as well. Those could be the ones to really benefit in the last couple of months of this year. Because if the economy's not growing a lot, then growth stocks look a lot more attractive. If the economy's growing at less than 1% next year, let's just call it that, and a Tesla's growing at 35% or 50%, Tesla obviously looks a lot better instantly than a lot of other stocks. Tesla, as you know, is also very much under-owned by Wall Street. So especially if Tesla does beat the average analyst consensus or really does run down their inventory, again, even if Tesla misses, but they run down their inventory, that could to some degree make up the difference in a slight loss. And you could actually see a huge gain tomorrow, even if you miss consensus estimates, if Tesla does run down like 30 to 70 plus thousand vehicles from their inventory, because that's going to boost your EPS numbers a lot for this upcoming quarter, in which estimates recently have been falling. And when you look at Tesla's charts and you think about this logically, back in May, June, July, August of 2022, Tesla was around this same price that it was at over a year ago. So this huge rally in 2023 where a lot of stocks hit new all-time highs, Apple's, Microsoft's, right, Nvidia's. Yeah, sure, it's easy for people to say Tesla's up over 100% in a year off of the artificial low, but you're not, you never got even to your high in 2022, around $315. So Tesla has very much been lagging behind the broader markets, and I do strongly think the laggers in 2022, small, mid-cap stocks, high growth stocks, are probably going to do well in 2024. That's where I would want to be. I don't want to be in an Apple. I don't want to be in a Microsoft, an Amazon, a Google, a Nvidia for that matter in 2024. Tesla, small and mid caps, stocks that are growing a lot, that's where I want to be for 2024. And I think that's how investors are going to position their portfolios. And that's probably why Tesla has been holding up a lot better than the broader markets. If you take a look at the S&P 500, the NASDAQ, or any other major index, the NASDAQ is under its 100-day moving average. Like, it got rejected there on Friday and then closed towards the low. Tesla is well above its 100-day moving average. So just pound for pound here, Tesla stock looks a lot better. But how Tesla trades, well, it is affected by the broader markets. And October is a very interesting month. The month of October has a well-earned reputation as a spooky stretch of time for stock market investors because of frightful wipeouts in 1929, 1987, and 2008. A broader look at historical returns, however, shows that October is also a month for producing fourth quarter market rebounds. Now, 1929, 1987, 2008, 2022, October was when you hit the lows. So, not great precedents, I guess. Either you have a really good October, or October, bad things can happen. There's no real concise kind of data here on this. It's really 50-50. So I think what's important right now is mainly the economic data. And keep in mind, indexes are not going to soar from here unless earnings really beat the estimates. And fundamentally speaking, stocks would be justified going higher. But Apple, Microsoft, these stocks that are trading at near all-time highs with sky-high valuations, well, people are not going to actively be rushing into those stocks. So I don't have good, broad kind of expectations of a huge index level rally. But individual stocks can rally. I know you guys have heard this before. And 2024, it's going to be even more applicable. 2024 is a stock picker's market. Tesla could do exceptionally well, and the broader indexes could do nothing. Now, as we went over in the last video, economic data this week is going to be very important. And on Monday, so tomorrow, you're really not spared the rod, if you will. At 10 a.m., you're going to get ISM manufacturing PMI. You're going to get a speech from Fed Jerome Powell at 11 a.m. Who knows if this is going to move the markets? You really need new information from the Fed, probably to get the markets to move. The markets are probably not going to move all too much unless we get something new from the Fed. The markets, I think, have fully understood higher for longer. Certain instruments have already reacted to that. The dollar's reacted. Bonds have reacted. Oil has reacted, as you would expect already. So that can be important. You have a lot of Fed speakers as well throughout the day on Monday. On Tuesday, JOLTS job openings, you're expecting 8.83 million. Last month's number was 8.827 million. So a little bit more job openings, nothing too concerning there, but you do want to see job openings come down. On Wednesday, ISM services PMI, you're expecting that to actually fall. So that would be really good news. On Thursday, you don't get much as far as economic data, but just Fed speakers galore throughout this entire week. And then on Friday, you get the big data. That's the non-farm payrolls. You're expecting 163,000. The revisions lately have been really bad, so you've come in with a high initial non-farm payroll report number, and then you've been getting revised down quite a bit recently. The unemployment rate is expected at 3.7%. The last month's number was 3.8%. Now, this data is going to be important because some of it can move the estimates for GDP. So GDP estimates are 3%. That comes out October 26th. I think if we do get kind of a black swan event, if we get something that's, really bad that causes the markets to fall, it's probably really bad economic data that causes estimates for GDP to come down a lot. Investors right now, they're saying, where's the recession? 3% GDP for Q3. That's the estimate. There's no recession. But if the data comes in bad, if we start to see a really big contraction in services, in manufacturing, or other areas, that could really shake up markets' expectations. So that is something to be watching this week. Again, data that comes in line with estimates is not a problem. It's not going to do anything to the markets. But if data does start to come in, much higher or much lower than estimates, that's where you get kind of a broader problem in the markets. And again, you guys want to continue to watch the bond yields. 2-year treasury yields were slightly down on Friday. Same thing with 10-year treasury yields, as we went over in the last video. Your yield curve is continuing to uninvert. Historically, this happens right before recessions. So, if you like to look at the yield curve inversion like I do, it's been accurate every single time it's went negative. You've seen a recession. Well, when it starts to uninvert, that's when you're imminently heading into recession. And you have been uninverting here on the 10 and the 2-year and the 10-year and the 3-month yield curve inversion. You've been uninverting quite a bit here. It's pretty steep. So we want to be watching for that. Let me know down below in the comment section how you think this October is going to be for our markets. If you look at something like the NASDAQ, the way you got rejected at the 100-day moving average does not look good. That could set you up for a drop, potentially down to the 200-day moving average. That would reset most of that kind of blow-off top gain you've seen in the summertime of 2023, mainly because of NVIDIA earnings. Now, if you guys want to come trade with us live in real time, link down below in the description of this video. We are actively out there hedging, protecting the portfolios, because this is what I would call a pretty dangerous time for the markets. Now, something else I want to show you is financial conditions. They have become the tightest that you have seen in a very long time. Okay? Very, very long time. This says since 2021. And before that, you were even more constrict since like the 90s. So you're at the highest point you have been as far as constricting the economy, constricting liquidity. This chart is also fascinating. It's the ARK Innovation ETF from 2016 to the present day, overlaid with the NASDAQ from 1996 through 2004. And the charts follow almost perfectly with the dot-com bust. which is just, I mean, crazy to look at this. So this does suggest that potentially by the end of this year, you could see new lows in the market if this chart does continue to be accurate. Who knows? But it's been pretty accurate so far. So that is going to go ahead and conclude this video. Just a brief recap. I'm very bullish actually on Tesla tomorrow. I'm pretty bullish on Tesla over the next coming months, and 2024 I'm really dang bullish. The estimates are far too low. Let's be honest. 27% delivery growth for the estimate, 29% EPS growth for the average Wall Street estimate is far too low. I think you likely see a lot more positioning in Tesla throughout the end of this year heading into 2024, but I do think on an index level, they don't look good. The technicals don't look good. Just where we are in the cycle, this late stage cycle, does not look good. There could be room for stocks to fall quite a bit on an index level. That could affect Tesla as well. And October, while it tends to be a decent month for stocks, October, like we said, 1929, 1987, 2008, 2022, these were all months in October that were really, really bad for markets. Like, new lows, 20, 30% drops. So let me know what you think. Do you think we're in for another really bad October? Or is this kind of the start of repositioning? Again, I don't expect a index level just soaring of the markets. I don't expect the NASDAQ to soar and hit new all-time highs. But I think Tesla could soar and hit new highs of this cycle. I do think small and mid-cap stocks could do well as money flows out of an Apple or a Microsoft into a Tesla, into small and mid-cap stocks. Let me know what you guys think about my theory down below in the comment section. Leave your delivery estimates as well. I would love to hear them. And again, if you guys would like to come trade with us live in real time, link down below in the description of this video. You guys enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.